Today's update is going to be a little longer because it was a crazy week, and we actually kind of got exactly what we wanted on paper. The inflation reports, as far as CPI and PPI, they came in cooler than expected, which is what we want to see. Also, oil prices are down, which should help us see a lower PCE number, and that is the Fed's favorite measure of inflation, and we'll get that at the end of this month. Normally, these things would, help mortgage rates come down, but that didn't happen, and, mortgage bonds actually got crushed this week. And I'm sure you're wondering why. Well, it's really not about the inflation numbers that we talked about right now. It's all about global uncertainty and volatility, and that's leading to panic trading. The U.S. and China are basically knee-deep in a trade war, and China just hit back with tariffs as high as 125%, which is basically a complete blockade on, certain goods. Really, once it's over 50%, there's no benefit to trading. And these tariffs are triggering stock market swings. And instead of investors moving their money from stocks into safe havens like bonds, which is really typical and usually helps rates, we're actually seeing a really different story right now. And that's because of margin calls. As simply put as I can, when stocks drop too fast, investors who borrowed money to trade get forced to sell whatever they can, including U.S. Treasuries and mortgage bonds, to raise cash. And that selling pressure drives bond prices down and pushes mortgage rates up. On top of that, there's a more complex trading strategy that's called the basis trade, which is basically playing out in the background. And this is where hedge funds use massive leverage, like 100 to 1, to profit from tiny price differences between bonds and futures. But when that backfires, they get margin called too. And again, this leads to forced selling and rate pressure. But totally separately, we are seeing credit card delinquencies rising. More Americans are only making their minimum payments. And consumer confidence is dropping pretty hard, which are all just early signs of economic stress. And some experts are actually saying we're already in a recession, even if it hasn't been officially called yet. So, what does this all mean for you and your clients? Right now, markets are really unpredictable. There'll be a point, likely not for weeks or months from now, when all this is going to shake out. And if a recession is confirmed or inflation keeps cooling, rates will come down. But between now and then, we're pretty much in a holding pattern with lots of volatility. And I'm hoping to be back with a better report next Friday after we get retail sales and some housing news, plus whatever current events are shaking things up. But have a great weekend.